industrial and farm products and address the non-tariff barriers. The US has also
उस पे भारत ने कोई छूट नहीं दी है। जैसे कि उदाहरण के लिए जीएम का है, जैसे कि उदाहरण के लिए जीएम का बना हुआ जेनेटिकली मॉडिफाइड कोई वस्तु भारत में नहीं आएगा। मीट उस पर कोई रियायत नहीं दी गई है, पोल्ट्री कोई रियायत नहीं दी गई है, डेयरी के कोई वस्तु के ऊपर कोई रियायत नहीं दी गई है। Already, Boeing is a large buyer of aircraft parts from India. Already, Airbus is a large buyer of aircraft parts from India. In fact, I'm told both these companies are looking at India as their largest foreign original equipment manufacturer, OEM, for parts. And going forward, and I've had conversations with the top board CEO and the top board of both these companies, there's a lot of excitement about the US-India partnership, and with the execution of this interim agreement as a first phase, this will only get strengthened. 40 to 45 billion. 44 के करीब है। अगर इतना ही आप लोग हमारे को ग्रिल करके स्पष्टता चाहते हैं, देखिए हमारे एक्सपोर्टर्स को मैं अपील करता हूं, अब बड़ा अच्छा समय है भारत का। जैसे माननीय प्रधानमंत्री जी कहते हैं, यही समय है, सही समय है।
$44 billion worth of Indian exports is at zero tariff. That's the word coming in from Commerce Minister Piyush Goyal. But also, let's go across to my colleague Sumita Karir, who's joining us to give us a fine print of the deal. Over to you, Sumita.
That's right. Hours after the US-India trade deal joint statement was released, Commerce and Industry Minister Piyush Goyal stated that India has continued to maintain firm red lines on agri, dairy and GM items as far as its trade deal with the US is concerned, while opening the market selectively for certain items like wines and spirits. Minister Goyal stated that the trade deal would open a $30 trillion market opportunity for Indian exporters. Let's also come now to the items that are on zero duty. Well, pharma products will be on zero duty, and to the tune of pharma products to the tune of $13 billion are exported to the US. In the agri sector, he claimed that spices, coffee, tea, coconut oil, Brazil nuts, vegetable, cashew nuts will have zero duty. Items like avocado, banana, mango, kiwi, papaya, pineapple, mushroom will also attract zero duty. Exports, items like aircraft parts, machinery, generic drugs and pharma, auto products including elementary auto parts, they will also be on zero tariffs. In fact, another important category is smartphones, and smartphone exports to the US, you remember, have consistently done well in the past 1 year. Now, the categories that have been kept out, well, it includes handicraft makers and farmers, which will not be harmed in any way. So you have GM items, meat, poultry, wheat, sugar, millets, fruits, oilseeds have been kept out. The items that India will be importing from the US, well, it is related to the items that India needs for its industries, and that includes the semiconductor industry. We will be importing chips for the AI mission, machinery for quantum computing, all of that will be imported. In fact, there is also industrial production items, cosmetics, computer-related products, and medicines related to pediatric and cancer treatment that will be imported by India. And the minister stated that there is an expectation that the prices of these commodities will go down.
All right, so that's the word coming in on India-US trade deal. But let's move on then. FICCI President Anand Goenka has welcomed the trade deal, saying it can help reduce the bottlenecks in trade. Let's go across and listen into what he had to say.
The India-US trade deal is an important step forward in advancing economic relations between two of the world's largest democracies. This partnership will lower tariffs, ease regulatory bottlenecks, and unlock new opportunities across sectors.
Welcome back. You're tuned into Market Cafe, where we're getting you all the global cues to watch out for before the start of D Street today. But let's take stock of how Wall Street fared. In fact, a sharp rebound that we saw coming in on Wall Street on Friday. Now, the Dow Jones Industrial Average surged 1,200 points, or 2.5%, to score its first close above the 50,000 mark after hitting that level for the first time earlier in the intraday trading. S&P 500 rose about 2%, and Nasdaq Composite finished more than 2% higher. A stellar recovery that we saw coming in, after the major averages bounced back, following a sizable loss suffered earlier in the week. Now, remember, the rout was sparked by a sell-off in the tech sector led by the software stock. So a strong rebound that we saw coming in on the Friday. U.S. Equity futures as of now are slightly higher as investors are awaiting critical economic data and another batch of earnings report following a volatile week that ended Dow Jones Industrial Average reaching a key milestone in S&P 500. Right now, futures, the trading is it's trading up 0.2%. Nasdaq futures is trading up almost 0.3% or thereabouts, and as far as Dow Jones is concerned, that has added 87 odd points, or 0.2% uptick coming in there. The futures is also trading up right now after the sharp rebound that we saw coming in on Friday. So that's how Wall Street is faring. In fact, strong global handover that's coming in from Wall Street. As of now, we are watching out for the jobs data and the inflation reports that is likely to come out from the US, and that's something that the investors are really watching out for. But moving on from US markets to how oil is faring, whereas as far as oil market is concerned, oil was stable on Friday, even though we do see a bit of a cool-off coming in on Brent. As of now, it's down 0.7% right now, trading at $67.56 a barrel, and WTI right now is also seeing a cut of almost 0.6%, sitting at $63.15 a barrel. Prices remain stable. It has stabilized on the back of the US-Iran peace talks that are underway, and the negotiations were held via Omani mediation on Friday to try to overcome the sharp differences over Tehran's nuclear program. And on the back of that, we do see the oil stabilizing on Friday, and right now the trading slightly lower as of now. But oil prices remains stable for now. So that's how the crude is faring at this point. But another big news that's coming in as far as global markets are concerned, or rather Asian market is concerned, and on the back of that, we do see Nikkei that has jumped up, solid gains coming in on Nikkei, is that Japan's Prime Minister has paid off. Sanae Takeshi scored a historic landslide, winning 352 of the 465 seats with her coalition in a rare winter session. Now, her ruling party secured a 2/3 majority, clearing the way for tax cuts and higher dependence spending. Now, inspired by Margaret Thatcher, Takeshi now has strong backing to push reforms despite market jitters and rising tensions with China. Donald Trump congratulated her, calling it a major political victory. And more coming in on the geopolitics and the global front. Israeli Prime Minister Benjamin Netanyahu will meet Donald Trump in Washington on Wednesday to discuss Iran nuclear talks. The meeting comes after fresh US-Iran negotiations in Oman, which failed to make any major progress. Netanyahu wants talks to include the limits on Iran's missiles and a regional influence. Meanwhile, Iranian Foreign Minister Abbas Araghchi warned US bases could be targeted if Iran is attacked, raising global tensions. And the US Treasury Secretary Scott Bessent says that unruly Chinese trading fueled last week's sharp swings in the gold prices. In an interview, Bessent called the rally a speculative blow-off driven by margin tightening in China, geopolitical risks and worries over Fed's independence. He also said that the Federal Reserve will move cautiously on shrinking its balance sheet and backed Trump's Fed nominee, Kevin Walsh, as independent but accountable. And a key aide of UK Prime Minister Keir Starmer, Morgan McSweeney, has resigned, taking responsibility for advising the appointment.
No.
Welcome back. You tune into Market Cafe, where we're getting you all the cues you need to keep on your radar before the start of Day Street. And let's talk about all the stocks that are going to be in news today on the back of news flow or on the back of earnings. And for that, let me get on board my colleague Rabinder, who's now joining us with all the stocks in focus. Rabinder, take it away.
Well, yes, on the back of ordering in Bejel project can be in focus, where company has secured a ultra mega order worth of rupees 400 crore from Power Grid Corporation. Apart from this, keep an eye on Ashoka Buildcon, where company has received two order worth of rupees approximately 1,320 crore. Tata Chemical can be in focus, where company will invest 515 crore for the new manufacturing unit in Tamil Nadu. Keep an eye on Tube Investment of India, where company has acquired 87% stake in Orange Koi for 73 crore and marking its foray into metal injection modeling segment. Keep an eye on Irida, where company's board has approved KIP worth of rupees 2,994 crore to boost renewable energy financing. Epic Durable can be in focus, where company has received approximately 7.4 crore phase 3 in incentive under MSIPS scheme. Aurobindo Pharma can be in focus, where a US FDA inspection at subsidiary ends with 11 procedural observation. Keep an eye on Gujarat Alkalis, where board has approved the capacity expansion plans of worth rupees 1,029 crore to boost the capacity. Pratap Snacks can be in focus, where company has announced the establishment of a new 425 crore greenfield manufacturing plant near Indore with a capacity of 60,000 MTPA. Ipca Life can be in focus, where companies has received voluntary action indicated from the US FDA for the Tarapur plant facility in the minimally acceptable state of compliance. And lastly, keep an eye on Cipla, where GST department has concludes its search operation at search inspection at the Maharashtra Waste facilities and offices. So keep an eye on Cipla too.
These are the stocks that are going to be in focus in the back of this news flows. But let me get on board my colleague Mitali also now, who's joining us with all the stocks in focus. Mitali, tell us what are the stocks that you have for us.
Right, talking about
the corporate earnings, firstly, in the healthcare segment, KIMS reported a healthy quarter. The strong revenue growth of around 29%. However, the profitability declined year on year, and also the EBITDA margins there, a contraction of over 400 basis points was seen. Also, the company has announced a strategic investment of around 100 crore rupees to raise its stake in Sunshine Hospital to 75.53%. Turning to the small finance bank, we have numbers coming from Jana Small Finance, who reported a weak set of numbers for quarter 3. The net interest income, it grew around 14% on a yearly basis, while if you talk about their profitability, there it dropped to 10 crore rupees from the earlier 111 crore rupees due to higher provisioning, which increased nearly 24% on a yearly basis. Also, the RBI, it has returned their universal banking license, and the application has been reversed, and also the bank said that will be submitting the revised proposal at an appropriate timing. In the consumer space, we have the results coming in from Sula Vineyards, which posted a disappointing set of numbers for quarter 3. The net revenue declined 10% on a yearly basis, while the net profit, it fell sharply by around 68%. The EBITDA and the margins also saw significant contractions in this quarter, indicating demand and cost pressure during the quarter 3. Also, Crompton Greaves Consumer Electricals, it reported moderate revenue growth of around 7% on a yearly basis, while the PAT, it declined 11% year on year. Margins also saw a slight contraction, but on the positive side, the company has announced its entry in the domestic electrical wires and the cable segment. Now, moving on to some corporate updates, we have IDBI Bank. The government said that the financial bids have been received and now will be evaluated, while separately Kotak Mahindra Bank has come with a clarification that it is not participating in the bidding process for IDBI Bank. Moving on to the PSU financing space, we have the updates coming in from the board of PFC and RECL, who have given a nod of the proposed merger, marking a key step ahead for the consolidation process. Lastly, keep your eyes on PB Fintech, where we have a clarification coming in from the management and the board, which said that they are not considering a QIP as of now in the near future, and easing concerns around the potential equity dilution. Back to you.
All right. Thank you so much, Mithali, for joining us with all the stocks and news. Let's move on and talk about SBI. That is another counter that will be in focus in the back of reporting healthy set of earnings for the quarter gone by. Profit for the quarter rose by over 24% to 21,028 crore rupees compared to last year, beating the expectations. Meanwhile, the net interest income saw a 9% uptick to come in at 45,191 crores compared to the same quarter last year. India's largest bank also reported an improvement in asset quality. Gross NPAs came in at 1.5% versus 1.7% on a sequential basis, while the net NPAs stood at 0.3% versus 0.4% on a quarter-on-quarter basis. So that's the scorecard looking like for SBI. But Ankur Mishra also caught up with the chairman, C.S. Shetty, to understand the bank's growth path going forward. Let's take a look at that.
Good words which I've spoken. I think we checked most of the boxes on the growth side, and in terms of the asset quality side, in terms of margin side. I think we have done holistic performance in the quarter. Coming to the trade deal, as you mentioned, I think most important element is that the overhang is removed now, and the sectors, obviously some fine-tuning is required here and there, but right. I think broadly we know that sectors, particularly some of the sectors which were significantly exposed to the US markets, that there is a great relief for them, whether it is aqua, it is a textiles, apparel. I think most of the sectors got benefited. This is very good deal from SBI point of view, because one is we have presence in almost all these sectors. May not be very significant exposures on these sectors because pharma and all do not borrow much, but the downstream MSMEs and we have significant presence in there. The trade deals, whether it is with the US or with the EU or UK, are going to be beneficial both for the corporates and MSMEs, cross-border transactions, where SBI is well positioned to take advantage of.
Definitely. In terms of sectors, of course, now we know that India's interest has been kept in mind. I want to ask you, you have also revised your guidance on credit growth. Do you think even this factor is a reason for this?
The credit growth, which we have revised from 12 to 14%, the guidance is now shifted to 13 to 15%. Definitely the trade deals would help to strengthen that guidance. But even before the trade deals, we have got benefited, the economy got benefited because of the GST rationalization, income tax benefit, consumption demand.
Well, that was the SBI chairman speaking on the numbers and growth roadmap ahead. But let's move on to a big exclusive. Commerce Minister Piyush Goyal tells ET Now that India's recent trade agreements are driven by strong political confidence and a focus on protecting domestic interests. He added that India has completed 9 FTAs with non-competing economies, with major gains expected in pharma, labour-intensive sectors and services. Let's listen in.
Well, I think it was basically the confidence that the leaders of the European Union nations and Prime Minister Modi had, and President Donald Trump and Prime Minister Modi had, that we are all democracies, we're all like-minded countries which believe in fair trade and open government. We are all democracies who work in the spirit of fair trade and the rule of law. And once you trust your counterparty, it's always easier to enter into a trade deal or into any conclude any negotiations amicably, satisfactorily, and come out with fair and equitable, balanced outcomes.
Right. And so India has been considered a trusted geography by very many partners.
Certainly.
And that's been reflected in the kind of deals that we have struck, with the EFTA grouping and then, of course, with the EU grouping.
Yeah, we've done 9 free trade agreements, yes, and all of them are with economies who don't compete with us. 37 of them, they cover 38 countries. Right, 37 of them are developed economies with per capita incomes ranging from $25,000 to as high as $200,000. One is with Mauritius, who doesn't compete. They're more into tourism and financial services. Not a very big manufacturing nation. So basically, we are opening up a plethora of opportunities for our labor-oriented sectors. Our farmers will get a lot of export potential. We can easily see farm and fish exports, which currently stand at 5 lakh crores, about $54 billion, doubling in the next 5 or 6 years. I can see before my eyes lakhs and lakhs, if not crores, of young men and women getting attractive jobs in all of these sectors. I can see our artisans, the handicraft and handloom sector, benefit hugely from these agreements. And ultimately, all of this will rub off with greater potential in the services sector. So all in all, with our ambition to become the 3rd largest GDP in the next couple of years, and then grow our economy from a $4 trillion GDP to a $30 or $35 trillion GDP by 2047 is a task that will be speeded up in the Amrit Kal with these agreements.
And so that's been the view that economists have also held, and investors as well. In fact, Barclays states that the markets are factoring in the best case scenario tomorrow morning when the markets open. But let me ask you, since you mentioned about the agri sector, and of course you've given clarifications of the past couple of days that we have protected, and India has maintained firm red lines as far as the agri, dairy and GM crop segment is concerned, not just with the United States, but with several other countries with whom we have struck our FTAs. However, the opposition is essentially stating that India will be swamped by agri produce from the US. But sir, the understanding is that we have opened up in a calibrated manner, and its complementarity is the key factor at play.
Well, first of all, I must categorically state that the interests of farmers have been fully protected, not even 99%, it's 100% protected. All the main areas which are sensitive, where we are self-sufficient, where we have good production and where our farmers are largely focused. The largest number of farmers are in meat products, poultry products, dairy products, GM foods, soya, corn, that's maize, rice, wheat, sugar, millets like jawar, ragi, bajra, kodo, amaranth, fruits like banana. We make a lot of banana. We produce strawberry, cherries, citrus fruits, pulses like green peas, moong, kabuli chana, oil seeds, certain animal feed, groundnuts, honey, malt and its extracts, non-alcoholic beverages, flour and meals, starch, essential oils, ethanol for fuel, which is a massive production in India, tobacco. All of these are completely kept out of the deal. No concessions have been given. Once all of these are kept out, and these are having some overlap with the products that America also produces in large volume. So we have, in a way, completely insulated our market from any potential threat to the farmers. Whatever has been opened, there's been a very calibrated opening, safeguarding the interests of farmers and producers so that there's no harm to Indian industry. And at the same time, the few items that have been given concessions, like soybean oil.
Right.
We import oil in a big way, $5 billion every year. So if we give a quota to the United States of America, it's okay, we don't lose anything. More suppliers, the merrier. Our consumers will get a better deal. When we allow, let's say, almonds or pistachios, they're only good for the economy. These tree nuts, nearly $3.5 billion of these are already imported every year. US itself exports $1 billion of tree nuts to India. So well within those parameters, we are trying to increase our bilateral trade without any of our producers or farmers suffering. At the same time, we have made sure that we get a good opportunity for export of our products to the US.
Absolutely.
So our farmers' products will now get only an 18% reciprocal tariff, which compared to many of our competitors, or rather all our competitors, is much lower than them. Simultaneously, we have also got many products lower tariff, many agricultural products a lower tariff in the American agri market, where reciprocal tariffs have come down to 0%. So those products we can really look at good boost to farmers' incomes and farmers' exports. Things like spices, bakery products, cocoa and cocoa preparations, tea and coffee, and their extracts. Many fruits and nuts, mangoes, guavas, papayas, banana, all of them will get zero duty concession when we export to the US. Many vegetable plating materials, many essential oils, some preparations of vegetables, fruits, nuts or other plants, fertilizers, prepared edible fats, animal or vegetable waxes. All of these also will now get zero duty access in the American market, and we should try to make the best of it and increase exports to US of these products. And the US imports these products in very large measure.
Right, sir.
I mean, let me give you a context. The spices alone, while we export about $360 million to US, their imports are $2 billion. Okay. And our spices are top quality.
True.
So we can really expand our exports of spices. Similarly, bakery products. America imports $7.65 billion of bakery products, which will go at zero duty. Our export is only $150 million, 2%. Can we not increase that massively? And who will benefit? Both our farmers and our processors, which means a lot of jobs for our youth.
Right.
So our effort has been to see how we can expand opportunities for our farmers with much lower duties on farm products or their processed products. And I think this is going to be a great deal for our farmers, for our poultry, animal husbandry players, for our fishermen, who will all stand to gain with this American bilateral trading.
So when you mention fishermen, I have to mention that the marine sector that you mentioned earlier as well, that benefits even more because of the kind of diversification that we've seen in EU and Russia as well.
Yes, while there was stress with America,
right.
We negotiated with the EU and got a lot of our seafood exporters listed there. And they've been exporting large volumes. Other countries also have started taking Indian seafood. And I remember telling all our exporters, don't lose US market share, but also diversify. So you get a double benefit.
And you did identify 50 countries for the purpose of...
We mapped countries which could be alternate destinations.
Right. So when you mention about these agri-exports overall, could you give us a percentage of the exports that are under this zero duty tariff rate?
Well, it's a question of now that it's not zero tariff rate, there's zero reciprocal tariffs. The export of products under these exempted categories, both in industrial and in agri, collectively, currently, we are exporting about $4 billion, $4.3 billion. Okay. But America's imports from the world of all of these products, agri and some industrial together, is about $348 billion. So it shows you the huge potential. Now that we have a zero RT. Our industry should grab the opportunity.
Absolutely. And it remains to be seen how private capex comes back into the ecosystem. It's been limited to a few sectors, but this also gives the opportunity to investors and, of course, the private players to come back. But let me ask you, sir, when we talk about complementarity, I have to bring about this aspect of the pact which states that India will buy $500 billion worth of goods. And that is where also we see that complementarity is in place. Now, when we talk about India sort of purchasing tech products, ICT products, or AI advanced chips for semiconductors and data center infrastructure, did you strike the deal, and did you strike this part in the deal, put the part in the deal, keeping in mind that India gets the first mover's advantage in this sector, given the kind of intense competition globally that we have seen?
India is very keen to expand our data centers, our AI mission, get into quantum computing, and we need a lot of equipment for that. There are times when countries have put restrictions on these exports. So it was very important for us to ensure the supply of these goods to India. And at the same time, we also need a lot of aeroplanes and their engines and parts. My guess is we'll need at least $80 to $100 billion of aeroplanes or the aviation industry requirements. At the same time, precious metals come to India in big volumes. Coking coal, we import a lot of coking coal for steel manufacturing. Going forward, we're going to double our steel production. So coking coal imports will also grow to nearly 30 billion plus. Energy requirements, LNG, LPG, crude oil, we have a huge demand. We've been importing for so many decades now. All in all, these products which we have identified as complementary with the US, where they could become a trusted supplier, they will add to the competition so that we get more attractive pricing and better quality. Our products on which our current import bill is already $300 billion. As the economy grows, and we are the world's fastest growing large economy, we estimate in the next 5 years that these products will be imported to the tune of $2 trillion. Now, for us to import from America $500 billion out of this $2 trillion is only going to be good for India. It'll add to the competition, get us better pricing. At the same time, there are many products, there is no other alternative. The data center equipment, for example. So, trusted geography from which we can hope to get these. So I think these, along with our overall strategic partnership with the US, we have a technology partnership, a critical minerals partnership, we have a partnership on defense. There's a multifaceted partnership with the US. And they are our most important trading partner, most important strategic partner. So I think this trade deal has given the stamp of approval to this relationship has ensured predictability and stability for investors and other stakeholders, and will give a huge momentum to the US-India partnership.
So when you talk about investments, we've seen very recently that Google has invested $15 billion in India's AI and data center infrastructure. What are the kind of investments that you're anticipating? Would you be able to give a figure, or is this a little premature?
It's a little premature, but let me hazard a guess, let's say, on data centers. Google announced a 1 gigawatt data center and a $15 billion investment. From different sources, I've been hearing about Amazon and other hyperscalers coming to India. And guess estimates are that on a very conservative note, 5 gigawatt. On a reasonable note, one can easily see 10 gigawatt of data centers coming into India. Now, we are easily looking at anything between $100 and $150 billion of investment into data centers alone. We are looking at LLMs being developed in India, quantum computing coming to India. We're looking at becoming leaders in applied artificial intelligence, given the huge talent pool that India has. So this technology sector is one area where we have limitless potential. And the US and India, as trusted partners, as natural partners, working together with the confidence that together we become a force multiplier in this sector. Clearly demonstrate huge potential, and this trade deal will encourage more and more people to look at India as a safe and reliable destination to invest.
Right. So since we're talking about technology and AI and data centers, let me take you through one portion of the joint statement, which is called for addressing burdensome practices and other barriers to digital trade. What exactly is the US looking at when they talk about addressing these burdensome practices?
Well, I think it's a two-way issue. We are looking at addressing non-tariff barriers on both sides. And we would like to actually make it easier to trade with a friendly and trusted geography like the US, which believes in fair play, which believes in honest rules of trade. And I think we should dismantle as many trade barriers, particularly between the US and India, European Union and India, which will help us grow our economy. If we have to grow our economy 8 times in the next 22, 23 years, and become a $35 trillion economy, become a developed nation, which is not only Honorable Prime Minister Narendra Modi's vision, but it is the collective commitment of 1.4 billion people. We have given unto ourselves this promise that we will become a developed nation by 2047, when we celebrate 100 years of independence. And all of these efforts will help spur growth and help us achieve our mission faster and more efficiently.
Right, sir. So just a final few questions before we let you go in. This one is particularly on what happens next. We've signed the framework for an interim agreement. Are there more negotiations that are pending? And where could we see the signing of this agreement?
Unlike many other framework agreements where the basic general discussion took place first and the detailing was done later, the US-India agreement rests on